Hello everybody and welcome. As we like to do every week, we like to take a look at the past week's market activity and then kind of bounce on the market and look for something to trade. Well, if you've been following the market at all, you see the last couple weeks, after about a 3-week kind of downturn, we've started to bounce back up, and the last couple weeks has been steadily improving, which also means volatility is going down. When the market goes up, generally speaking, volatility goes down. When the market goes down, as you see here, volatility tends to increase. So the market volatility is down and the market's rebounding. This is the S&P 500. The NASDAQ is going to look almost exactly the same. And the Russell also looks about the same, except their dip was much bigger. They haven't come back quite as far, but it's similar kind of look. So what are we going to trade this week? We are going to go to natural gas. And to do that, we're going to go to UNG, which is a natural gas fund. And you can see natural gas has kind of been laying around about here, bouncing up and down. It's gone slightly up over the last couple weeks, but also you see here volatility has gone up as well. Generally speaking, when it comes to commodities are things like gold, this natural gas, copper, you name it. Those are oil, those are commodity type things. They tend to move in the opposite direction. When the price goes up, volatility tends to go up. And when it goes down, you can see it tends to go down a bit as well. It spiked a bit here. But generally speaking, they move opposite to normal stocks. Their volatility increases when the price goes up. I know, kind of weird, but just a good thing to note. Not always, but generally speaking, that's how it works. So what are we going to trade here? Well, volatility is high. It's fairly near its lows. If we look there, you can see this seems to be kind of the bottoming out area for the most part of where it's been. So around, let's say if we just kind of go there, let's say it's around 650. It's kind of where it's bottomed out over the last few months. So if we can stay around that number or above over the next 45 days, that's kind of the trade we're looking to make. So what we're going to do is go to the trade page. We'll close all this up. We're going to go right here to 46 days because tomorrow will be perfect. It'll be 45 days. We open this up. Let's just shrink this to make it easy. So the price is 705. So in order to make this trade, we're going to sell a put vertical just below the stock price. 7 is as close as we can do it. So if we sell a put vertical, assuming it's going to stay up over the next 45 days, this is going to be a $1 wide vertical. We're looking to collect at least 33 cents or more for this trade. Right now we do. One thing I want to show you here is if I set this trade up, you can see right here, break-even stock price is 661. What that means is, as long as the stock stays above 661 over the next 45 days, this will be a winner. It's at 705 now, and as I showed you on the chart, 650 seems to be about its low over the last few months. So this seems like a good kind of assumption to make, at least in my head. Obviously, you could do the opposite, but this is the assumption we're making, that it's kind of fairly near its lows. Volatility is pretty high. 650's been its low over the last few months, so 661 is our break even. Seems like a good place to be. So that will be our trade for tomorrow. Assuming everything stays the same, in UNG, we will sell the put vertical just below the stock price, collect at least 33 cents or more, and that's a good trade. And that is our short put vertical trade for tomorrow. As someone that's gone through the process, I know that making real trades is scary for many reasons, not the least of which is, where do I even start? I mean, there's so many roadblocks to making trades. What stock should I trade? What direction should I choose? Which options am I buying or selling? The list seems endless, which is exactly why I created my option income alert system. This might sound silly, but I wish I had me by my side when I started. I mean, my first option course cost me $6,000, but I'm giving you the chance to trade side by side with me in the most accessible and affordable way possible. At the same time, you get to save yourself the thousands of hours and the thousands of dollars it took me to get here. Listen, I've been where you are now, and I know how hard it is to get started. It's scary. I mean, why? Because fear of the unknown. But I'm here to steer you until that fear is gone and you're comfortable enough to trade on your own and create your own residual income stream. So please, take advantage of me while you can. So how do we turn your knowledge into actual income with as little risk as possible? Well, the way we do that is by offering up the option alert for only $1 for the first month. Now, the option alert itself is going to send out 2 to 3 trades in real time as I make them via text or email directly to you. And as I close these trades, you'll also get those closing alerts in real time as well. Now, if you want an even better opportunity, the Option Pro, which is the exact same alert service as the Option Income, offers up all the content I've ever made, courses, webinars, etc. Over $2,000 worth of options courses for only $19 for the first month. So the way we're going to sign up for either of these is by going to sharpertrades.com, clicking on the products section. Both of these alerts will show up. Depending on which one you prefer, you'll type in these coupon codes, and you'll either get the option alert for $1 for the first month or the Option Pro for only $19 for the first month. Look forward to seeing you all over there soon. Take care.